Today's articles were pretty interesting. I think this is August 6, 2023, Business Line. Please listen to this at 1.5x. The first is energy transition, a pace at Gencos. So basically, how various businesses or large industries are shifting towards green. So energy consumption is directly proportional to kind of per capita income. So as your per capita income grows, your energy consumption needs to grow. And by 2030, the policy indicates that India should have almost 500 gigawatt hour of green energy. And that translates to almost 40 gigawatt hour of green energy capacity annually every year, which would be bifurcated into nuclear, solar, hydroelectricity, wind. And we can see the proof of it by looking at the order book and the ancillary. Ancillary means the parts of it. So, for example, Suzlon, they surprised the market by large order books in the wind segment. Now, currently we have 175 gigawatt hour installation capacity, but we need to reach to 50 gigawatt hour, out of which 30 gigawatt hour would be hydro and the rest is wind and solar. Now, the capacity addition in wind is not that large because most of the areas where wind energy could be derived has been, I think, more or less occupied. So solar is untapped and it's huge. So it's almost around 286 gigawatt hour in the next 7 years. So this is what it is saying, and it gives various Gencos, generating companies who are putting up capacity and what it would look by 2030. So, for example, NTPC, Tata Power, JSW, Adani, NHPC, Torrent, and SJVN. It talks about the current plan and also how government, with its policy in the wind energy segment and also with PLI scheme, is trying to simplify and push this sector so that they generate. Other areas where people are working is energy storage system, battery energy storage system, pumped hydro energy storage, because renewable energy is intermittent. So you get it from say 8 a.m. to around say 4 p.m., right? And the rest of the time you sort of push it with coal-based situations. So that is where probably I mean you need battery storage so that you can also push this current in the night time or peak currents at night. The next article talks about the mutual fund equity schemes, and retail investors are apparently investing. I mean, this is called DIY investing, and it's not surprising. I think most of them have got, uh, I mean, they entered the market at 2022, I mean, peak, and they had a very bad year. So this year, probably it's mostly driven in microcap and pushed by YouTube and influencers. So they're learning, some of them are learning, and some of them are tip based. Interesting to note is almost 12.3 crore demat accounts are there in India, and NSDL, CDSL have also seen larger demat depositories opening. We need to look at Fed because the rate hikes are cause of worry because the FPI money, which has been coming in for I think almost 16 weeks, this week actually there was a sell-off, and this sell-off might increase if the rate hike is more. So that can deflate the market a little bit. That's the main point. Next article is Cabinet clears around 1.3 lakh 39 lakh crore funding to scale up BharatNet project connecting 6.4 lakh villages. Basically fiber cable optic connecting various villages so that everybody is connected on the internet. And almost they want very interesting numbers are over here. So this is the biggest rural telecom project in the world, and they will connect almost around 2.5 lakh gram panchayat across the country. The average household consumption of data is around 175 per gigabytes. Sorry, this is not gigabytes per month. Um, the cabinet had approved almost 1,39,000 crore in tranches, and this project has started from I think 2011 to 2011 October 2011, mainly done by BBNL. And then there is a concept of village level in entrepreneurs who are taking the connection. I mean, there would be a node from where they'll take it to the villages and then provide the services over there. Uh, yeah, this is a pretty interesting article, and they talk about the cost and all of these things and how this will push digital India and all of those things. Yeah. Next article, I mean, this is what we expected. Government banning the laptop import restriction over here. Not banning, import restriction. There's an imposing license restriction for import of laptops, PCs, and all of that with HSN code of 848741. And this also, we see that Reliance Retail is also uh, they're going to import their current laptop, and they're going to later on partner with Dixon and other like Sanmina to make their new laptop, right? This will, I mean the laptop import laptop uh, restriction sort of leads to a lot of collaboration. And we also saw that prices of these retail EMS companies have really spiked up in the last few days after the news. Uh, Reliance Retail is currently importing the laptops and then assembling it, but later they want to manufacture it. And these are the specification of the laptop. And what is important. So yeah, currently Reliance 4G phone is manufactured by Dixon Technologies, and they make around 15 million phones. So 1.5 crore phones are made. So that's pretty interesting. But there's definitely a push for local. I mean, because we are a large consumer, we should everything should be made local. The next is Nifty at the rate 19,000, and this article sort of gives a viewpoint from the various indices of Nifty and how they are placed. So Nifty high mostly because of banking cycle, almost currently the banking cycle, which was the credit offtake, I think. Let me check over here. Yeah, so there was initially 10 to 11% credit growth, but now banks are experiencing almost 15 to 16% credit growth. Uh, the article kind of says this is both a cause of celebration as well as discomfort, because not everything is all good. There are some shoots where it's good, but there are also some risks available over here. Nifty is currently almost 4% premium to its 10-year average, and 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 we should look at banking, for example. So it talks about general, but then it goes into specific. For example, banking, where there is credit growth, and banks are relatively cheap because of revival in housing and all of that. And credit consumption, banks are also expecting that rural demand comes up, which will lead to credit consumption and credit growth and consumption as well. Yeah, that's kind of mentioned over here. The NIM expansion has probably played out, basically the net interest margin, what the bank, uh, yeah. Then the next part is one can read over here as well on the same thing. But the good thing is bank's balance sheet has now low provision compared to pre-COVID. In pre-COVID, the gross net GNPA was almost 8 to 12%, and now it is at non-performing assets are at 1 to 3%. So this is very good because banks needs to provision less for these non-performing assets. And currently, it's still undervalued. Almost 13% discount is there. So this is also a good opportunity for large money to come into it, because Nifty is comprised of almost 40%, I think, banking. The next is Nifty Auto, and this is also in the midst of a cycle. It's trading at 15% premium, but what is good is that the demand is pretty high. Raw material costs have gone down, semiconductor issues have gone down, and due to this raw material cost going down, the margins have expanded, which is leading to more profit. And the sales growth is happening because of large amount of demand. We look at XUV, for example, we see incredible amount of demand coming in. Yeah, then we have Nifty Pharma. So Nifty Pharma is trading at 28 times 1 year forward earning, which is almost 9% premium to its 10-year average. And again, we see that US market, which was a bit painful, now it's improving, and US has also approved, or the clearance rate has improved to almost 93%. So this is kind of nice. And de-risking revenues from US and over dependence on generics. This has uh, this is also good for companies. Yeah. For auto, I forgot to mention the average selling price is kind of pushed up because of the sale of larger percentage of SUV, the EV, and the premium segment vehicles and two-wheeler as well. Yeah, so Nifty looks good. I mean, sorry, pharma looks good, and there could be opportunities in pharma. Next is FMCG. It's very expensive, and it's almost 19% premium. It's trading at 19% premium to the 10-year average, and there has been some improvement of gross margin, but towards EBITDA, we don't know if it would improve. We'll have to see the numbers coming in. And this article kind of talks more about, again, rural recovery. because it's also starting from a low base, and the monsoon and increased farm income, it will also push rural recovery, and which we would see, and let's see how it works out. Yeah. Nifty IT, the valuations are high and the prospect is low. I mean, the summary is that the growth is expected to be in single digit. uh, EU, US, there's a slowdown. So, but the companies are winning deals, which is good from a longer term perspective. But in the shorter term, there's still delayed projects, and these deals might also get cancelled in the shorter term because we don't know how the situation would be. So, in the next 1 to 1.5 years, we don't expect significant movement of this stocks in this space. And this article kind of talks more about it in details. All right. The next is regard. It's a general read, good to read on how should one approach the uh, IPO segment. I mean, how to read the DRHP and all of those things. So uh, interesting things would be we should look at it like a LinkedIn profile, not color everything with the same light. We should understand what is the objective of the IPO, whether it's to, I mean, say for example, it's deleveraging, whether it's for new capacity or paying off the existing owner's debt or some mistakes that he did with decision. So we should be very careful, because if they are putting up new capacity which also generates superior rate of returns, I think that's a better business. Also, we need to go in and understand the business, because they have a section on industry overview and business overview. And we should also check whether whatever is the sales pitch, RHP is basically a sales pitch. Uh, does the competitors align? Does the customer align to it? Does the growth forecast what they say is correct? How does the supply chain management looks like, or are they overly stating their conditions? We should also look at key financial and operation metrics, and also the risks. So financial analysis, one can read over here what should be seen. We should see that operation cash flow and earning growth should be in sync. I mean, earnings going down, oh, sorry, earnings growing up, but operation cash flow is going down. That's not good, because then money is getting stuck into stuck in working capital. Then we also look at the source and the reason for earning, whether it's or improved EBITDA, whether it's demand, operating leverage, or it's because the expenses are kind of artificially lowered to look more profitable in the near term. So, because before IPO, company wants to project a very rosy picture, but that's not always the case. Working capital management, long-term and short-term debt and its uses, whether long-term capital debt is used for long-term asset, that needs to be checked. Finally, there's some corporate governance and forensic check, what one must check, and some other sanctity tests like in Twitter and Glassdoor, or patents and all if the company is claiming a lot of intellectual property. The next is say no to vexation after vacation. So there's a lot of interest towards buy travel now and pay later. So people are traveling like that. I don't know how the 20% TCS will impact, but companies are kind of collaborating with NBFC. So say for example, Make My Trip collaborates with some NBFC, and they give some option to a customer on no cost EMI or or the some sort of a personal loan for traveling. So this is something one should read at, because it's not always rosy. Uh, this page generally has some feedback on various what you call funds. We can skip this one. I'm not reading this. One interesting fund is the logistic fund, which has been there, but even HDFC is planning to take out. Now, logistic is shifting from a 16.28 lakh crore to a 27.1 lakh crore market size. So that's pretty 27 lakh crore. Sorry. Yeah, that's the total market size, and they don't just include parcel courier or e-commerce, but other logistical movement as well. As the economy is recovering, auto OEMs, ancillaries, rail, airlines, all are improving, and they need logistics. So logistics is at the key of it. And yeah, it's interesting. I mean, there's a lot of information over here, but it just talks about theme and how it is going to grow and what are the drivers for it. So and the quality of the fund, but nothing beyond that. Next is about mutual funds, which are specific for retirement. It's a good to read, but the main point is that it comes with a lock-in period generally, and the performance is not spectacular given that there is a lock-in period. So that's what mostly this article says. One can read through it. It's not too bad. Yeah. Okay. Then next is small business financing. So this is basically an IPO coming for SBFC uh, finance. Looks like an ad. Let's see how it works out. They are saying almost two times price to book, which is also Ugro Capitals, and SBFC generally aims to SME lending or small businesses, lending to small businesses. I think also they'll have a loan against property. It's almost priced 2.3 times price to book, forward price to book, FY24. And yeah, let's see. It's not too expensive, not crazy expensive. Yeah. The next article is Sula, one of my interested. I'm actually interested in this business. Sula is has almost 50% of the share in the wine market. Globally, India's, I mean, 50% of global consumption is in low alcohol drink, and global average is 1 liter per year, whereas India it's 8% in low alcohol drink. So there's definitely growth, and also the amount consumed 100 ml per year. So both of them we should see some I mean, some progress. So this talks about why Sula is an interesting business, and what are the modes that they have, or comparative advantage, like long-term raw material contract with farmer and access to vineyards, etc. And some premiumization. Interesting to note that premium products are actually growing more. That's over here. They talk about it. And yeah, the stock has also given good return, and it's still expensive. It's not cheap. And recently, there has been almost a 10% drop because of the risk, which they also mentioned in their DRHP. So something over here, one can read over it. There was an excise related litigation that is over here, but this will not impact the business in general. And the key risks towards this is internationally, some of these stocks are, I mean, some of these wine stocks are loss making. In India, there's definitely clear runway for growth, and Sula's risk to reward is also very favorable. And what are the threats? One is international brands might, due to these free trade agreements and all, might get a piece of India's wine segment, and the exorbitant license that is there, that might get reduced. So this will bring in more competition, and the others are, legal and excise related and regulation related issues. So that's basically it regarding Sula. Then there's this again page on derivatives. Interesting, but I'm not going to read through this one. And it also talks about ATM versus ITM and the gamma, why you should buy in the money, not in the money, but more out at the money options. So the benefits of it, yeah. Strong resistances. We expect rate hike, which will subdue demand, but oil production cuts will increase the demand. So that's how it's playing out, and we would expect to see strong resistances in the crude oil segment, and they expect a corrective fall over there. Again, resistance ahead for Nifty 50 and Sensex. Uh, the FPI part of the story is interesting. Almost for 14 consecutive weeks, FPIs have bought, but now they are net seller, and probably they'll be selling in the next few weeks again. Some of the interesting stock that has been uh, not recommended, read through is Cummins India, Manapuram Finance, almost 150 rupees upside, Oberoi Realty. So one could look into these. Then you have another one, LIC's Jeevan Kiran, and premiums are hefty. So the main problem is that I mean, if I am investing in a life insurance or life protection thing, I'm paying premium, and say for example, this is my cutoff date. If I survive through this, I get nothing in return. So this entire thing is lost. That's not very attractive. So what they are doing is they're also giving you some amount of money once you cross that, expiry barrier. Say for example, here uh, you won't get the life insurance benefit, but you'll get back your premium. So if you live long, this is what you get. So this is very attractive for both people who expect to die early, or people who expect to live a longer life. This is attractive for both. Uh, Problem is the premium that is there. I mean, the premium are much larger because they have to also took into account this one. Yeah. Then I've not gone through this. IFL Security forays into will service. Interesting. CAMS launches AI embedded KYC solution. Okay, great. Interesting article. All that glitters is not gold. So this is something called Gold Plus from Gulla Cap. Now this is not a very I mean, this is a very misleading sort of a thing. They say that almost 16% per annum can be got if people sort of lease their gold out for to shopkeepers, gold jewelers, who would then take a bank guarantee and give a 16% return on the gold price. The problem is gold itself had risen by 11%, which is not a normal thing. So that is mentioned over here. One can read through this one. And second is 5% is the lease amount. Now that risk for that risk, if you get only 5%, that's not also very attractive. So also the customers do not have any regulatory recourse, and the article in general says that gold ETFs and sovereign gold bonds are the best way forward. I mean, these kind of good luck plus stuff, not that great. Um, I think mostly review of various funds and all. One can read through this. Bank of Baroda, again, net quarter up, uh, quarter one net up 88%, and because of the net interest income, same with SBI. Free float and all of these things could be read over here, nothing fancy. Maruti says that they'll double their production capacity by 2031, and they expect some reorganization, export, and general demand to play up. One can read through this one. It's not a bad idea to get a perspective of the leader in the auto OEM space. Then the next article says that inclusion of Indian bonds into global indices might uh, increase foreign participation from 0.9% to 10%, which is huge, and this will also help the corporate bond market. So this is yet to be seen how it plays out, but I mean, this S&P had predicted that funds available for corporate debt issuer could be almost triple relative to the nominal GDP by 2030. Yeah, so that could be inflow of 20 to 40 billion dollar, and it might increase to 80 billion dollar over the next decade, which is also very nice. One can read through this one. Punjab Sindh Q1 dips, increase in bad loan and all of that nonsense. Yeah. Then income tax department to hire young professionals for litigation, and because they expect some level of litigation happening. So yeah. And then Anand Mahindra says, don't reinvent yourself and abandon linear thinking. So that's all for today. Hope you watched it at 1.5x, and please give suggestion how to improve it.